Alright, listen up investors. The Mid-Atlantic multifamily market is calling. We're talking Washington, D.C., Baltimore, and Northern Virginia. And let's not forget Tidewater and Hampton Roads. Q2 2025 is shaping up to be pivotal. Now why this region? Why multifamily? It's about stability and rock-solid fundamentals. Government jobs anchor D.C. and Northern Virginia. Universities are churning out renters everywhere. Tech is booming. Healthcare is expanding. This creates a consistent demand for housing, and multifamily offers the scale investors crave. The outlook for Q2 2025 is electric. We're seeing signs of continued strength. Sure, there are always headwinds, always. Interest rates, construction costs, who knows? But the underlying demand, it's ferocious. People need places to live, period. The Mid-Atlantic delivers on all these fronts, so get ready for a deep dive. We're going to break it all down. This is your chance to get ahead. Let's get to it. Investment trends. Money is flowing into Mid-Atlantic multifamily. Smart capital, institutional players, they're all in. They see the long-term value and the growth. Sales volume is robust, especially for quality assets. Washington, D.C. remains a powerhouse, and this is no surprise. It's the nation's capital, a global city. Sales volume for well-located properties is strong. Class A assets are still highly sought after, but even Class B is getting a lot of love. Value-add opportunities are everywhere if you look. Baltimore is making serious waves. It's a comeback city. Investors are rediscovering its potential, its grit. Sales volume is picking up significantly. Northern Virginia, it's an absolute tech hub. Amazon's HQ2 is a game changer, still is. This drives population growth and housing demand. Northern Virginia is on fire. And let's not forget Tidewater and Hampton Roads. These coastal markets offer unique advantages. Strong military presence provides stability. Port activity drives economic growth. Lifestyle appeal is a big draw for renters. These markets might not be as flashy, but they offer solid returns. Cap rates, the magic number for investors. It tells you your potential return on investment. Think of it as the yield on your property. Lower cap rates mean higher prices. Higher cap rates can mean more risk or more reward. Understanding cap rates is critical for success. So, what are we seeing in the Mid-Atlantic for Q2 2025? Cap rates have seen some upward pressure, thanks to rising interest rates, no doubt. This has created a bit of a buyer-seller standoff. Sellers want yesterday's prices, buyers want tomorrow's, but deals are still getting done, make no mistake. The bid-ask spread is narrowing in some segments. Smart investors are finding common ground. Regional variations in cap rates are significant. DC typically sees the lowest, most compressed cap rates. It's perceived as a safe haven, a blue-chip market. Northern Virginia also commands premium pricing. Baltimore, on the other hand, often offers higher cap rates. This can mean better cash flow potential. Tidewater and Hampton Roads fall somewhere in between. Understand the local nuances before you jump in. It all depends on your risk appetite. How about the rent growth explosion? Rent growth. It's what every multifamily investor dreams about, and the Mid-Atlantic is delivering. We're seeing healthy rent growth across the region. This helps offset inflation, protects your bottom line. Demand for rental housing remains incredibly strong. People are willing to pay for quality and location. This is a landlord's market in many areas. In Washington, D.C. and Northern Virginia, it's a tale of tech. Tech jobs are fueling demand for apartments. Submarkets near employment centers are booming. Arlington, Alexandria, Fairfax County, all hot. Urban core areas in D.C. are also seeing renewed interest. Young professionals want that city lifestyle. Rent growth here is outpacing many other markets. Follow the jobs and you'll find the rent growth. Baltimore's rent growth story is compelling. It's offering relative affordability, attracting renters. Certain submarkets are showing impressive gains. Think areas undergoing revitalization, new investment. There's a real buzz around Baltimore's potential. Tidewater and Hampton Roads are consistent performers. Rent growth might not be as explosive as Northern Virginia, but it's steady, reliable, and sustainable. Solid fundamentals mean solid rent growth. What about all those new buildings on the block? The region is undergoing a development boom, but are we building too much, or just enough to meet the roaring demand? This is a critical question for investors. New supply can put pressure on existing properties, but it also signals a healthy growing market. In Q2 2025, the Mid-Atlantic pipeline is active. Construction cranes are still a common sight. Developers are bullish on this region's future. Construction activity levels remain elevated but with challenges. Material costs have been volatile, a real headache. Labor shortages are also impacting timelines. These factors can influence project viability. Some projects might get delayed or even shelved. But overall, the pace of new deliveries is significant, especially in high-growth corridors like Northern Virginia. The builders are busy, very busy indeed. Where are they building? What are they building? We're seeing a mix of product types: Class A luxury high-rises in urban centers, garden-style apartments in suburban submarkets. There's also a growing focus on workforce housing. Vacancy and absorption. Are tenants biting? Vacancies. How full are these buildings? Low vacancy is what you want to see. It means strong demand, pricing power for landlords. High vacancy? That's a red flag, folks. In Q2 2025, Mid-Atlantic vacancy rates are generally tight. Despite new supply coming online, units are filling up. This tells you the demand side is robust. People are moving in, signing leases. Washington, D.C. and Northern Virginia are leading the pack. Job growth in tech and government keeps demand high. Vacancy rates in prime submarkets are impressively low. Even with new deliveries, apartments are getting absorbed. Suburban areas are particularly strong, still. The work-from-home trend has shifted some preferences, but the allure of city life remains for many. It's a balanced, healthy dynamic right now. What about Baltimore and the Tidewater region? Baltimore's vacancy rates are showing improvement. As revitalization efforts take hold, demand grows. Newer properties are leasing up well. Tidewater and Hampton Roads benefit from stable demand. The military presence acts as a constant anchor. The Port of Virginia is the second largest port on the East Coast. It also plays a crucial role in the region's economy. Vacancy rates here are historically consistent, and these markets are absolutely holding their own. Investor plays in the final word. So, what are the key takeaways for you, the investor? First, job stability in the Mid-Atlantic is huge. Government, tech, education, healthcare, these are pillars. They provide a resilient employment base. This translates directly into sustained rental demand. It's the bedrock of this market's strength. Don't ever underestimate the power of jobs. They are the engine driving this train. Second, value-add opportunities are plentiful. With an aging housing stock in many areas, there's a chance to acquire, renovate, and reposition. Create modern living spaces and add amenities. An opportunity to push those rents and boost your net operating income. This strategy can deliver fantastic returns. Yes, it takes work, it takes vision, but it pays. Third, market timing. Everyone asks about timing. Is Q2 2025 the perfect moment to jump in? Look, trying to perfectly time the market is a fool's game. Instead, focus on finding great deals. Focus on assets with strong fundamentals. Focus on submarkets with growth potential. Opportunities exist in any market cycle for smart investors. Don't wait for the perfect time to invest, create it. Schedule your strategy session with the team at Surrey Capital Partners. Visit surreycapital.com today.